Ladies and gentlemen, good day and welcome to the Birla Corporation Q2FY25 earnings conference call hosted by HDFC Securities. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Ravi. Thank you, and over to you, sir.
Yeah. Thank you, Sejal. Good afternoon, everyone. On behalf of HDFC Securities, we welcome all of you to the Q2 and H1 FY25 earnings call of Birla Corporation. From the management side, we have Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Saraogi, Group CFO. I now hand over the call to the management for the opening remarks, which will be followed by Q&A session. Thank you, and over to you, sir.
Thank you very much, Rajesh, and good afternoon and welcome to everyone. It's rather heartening to see we have almost 100 or a little over 100 now guests available, despite, what should I say, not so encouraging results. So that's a matter of encouragement for us, that all of you therefore stand by our comments and communication. And we have been in the past tried to be as realistic and as, to the best of our judgment, portray what we see the market and our company's prospects are. And that's how we would like to approach this particular call as well in talking to you. Normally, probably when the results are not so good, people say much more to explain, but I wouldn't do that. We have explained our stuff in the whatever we had to say in our press release, which most of you would have seen. All that I'll say is, we recognize the market reality and we saw the headwinds. And our strategy is in that sort of a situation to keep our head down, back with play with a straight bat, stick to the wicket, hold your ground, rather than try to do any shenanigans or try any kind of, trying any helicopter shots or anything of that kind. And that's how we would like to navigate in the days to come as well. Because we remain, as we have stated in the press release, cautiously optimistic. Though I have seen many people expecting a huge upturn in the second half, of which, almost a month is already over. So that leaves 5 months, and people have expected, some have talked of a massive upturn. While we definitely see things improving on both price as well as on volume and demand front, but we are not painting an extremely bullish scenario. We have projected our second half in terms of volume increase at about 8 to YoY basis. Based on H2 volume. H2 volumes, we have looked at second half about Y-on-Y basis 7 to 8%, and that's how we'll stick. And for an entire year, we're looking at about 4%, thereabouts, plus or minus, and that's what we think is realistic at the moment to assume. In terms of EBITDA, we are again looking at between first half to second half. We have projected about between 150 to 170 rupees upswing in the EBITDA format, and that is how we see it translating. We don't see, again, going by some market indications, people have talked about getting only through realization. People have talked about getting 200 rupees gain by realization alone. We don't see that as in such an optimistic scenario. So we have taken our all told, given our cost, continuing cost efforts to reduce costs, increase our the geomix and everything else. We have projected about 170 rupees, as I said, and that is all that we would say by way of guidance at the moment. And the rest of it, we remain consistent with our strategy in whatever we have been doing, and our approach would be we have had a sort of in our older plants, our core markets, we have had a little slip in terms of capacity utilization, and I'll explain why that has happened. And what we really look forward to is to be able to take our capacity utilization up in those plants to over 100%, as we have been doing, or close to 100%, especially in our Central India plants. And Mukutban, where we had achieved a very good ramp up and scaling up, and we hope that the pricing scenario would allow us to again get back to the same kind of levels of about 60%. Last year, what is that?
Capacity utilization 48% last year.
No, towards the end we were almost operating at about 60%. 60%.
Yeah.
So that is the kind of level we would like to get back to, hopefully with the demand picking up, and if there is slight upturn in prices. So in the West, especially Maharashtra, we are being circumspect because of the elections which have been announced, and that impact will continue for about a month at least. And whichever government comes in, by the time they settle in, new funds are sanctioned, etc., I think we will get into at least January. There in our core market, we are also factoring in the Mahakumbh, which is going to happen in Prayagraj. That's once in a 12-year event, as you know, and that entire area, the logistics get impacted. So that will also something which will eat in to the peak season period of January, February, which is usually there. So we are being cautious on that count as well. But the real pain point in the last 2 quarters has been, in our judgment, in our view, has been the non-trade sector. If there is any impact, everybody talks about consolidation in the industry. If there is any, I think, visible impact of consolidation, we have seen that happening in the non-trade sector, where the prices had crashed, come down very abnormally or to unrealistic levels in the last quarter especially, and in the markets where we operate in North and Center. We were never major players in the non-trade category or OPC category. As you know, historically, we have tried to keep our non-trade levels to below 20% and our OPC at below 15% of our capacity over there. Now, because of the whole market dynamics, the trade sector or the individual home building sector, since they were not as buoyant in the last 2 quarters, as all of you would have noted and seen, there has been a major market shift towards non-trade. And because of the market shift towards non-trade and also OPC component, I'm talking about the industry as a whole, not about us. So since the market shifted towards non-trade and also OPC, and overall industry capacity utilization came down by a couple of percentage points by our reckoning, or whatever figures which are available from the analyst reports which are coming out. Then there has been a shift in that direction, and there were price drops very, very significant, which made it unviable for us to be participating in the non-trade and OPC segment in many markets, especially in Rajasthan, where things dipped, as I said, to very abnormal levels in the pricing of non-trade and OPC. Similarly, in UP, in Bihar, things and people were participating. So we deliberately chose to keep our exposure limited there, because we certainly didn't want to operate at a variable cost loss or a cash loss to be in those markets. And that has resulted in our slightly lower capacity utilization than what we are capable of, and what could have done, and we have not certainly tried to push volumes unnecessarily, which would have hurt both us as well as the industry. We tried to be prudent in that, but we hope from whatever we are hearing, if the non-trade prices, if there is more, I should say, rational pricing and market things happen in the non-trade and OPC sector, that will have its positive rub-off in the trade sector as well, and that should benefit everybody, and that is which we see as a silver lining going forward. Finally, coming back to summarize, as we said, we are looking at second half in a very sort of positive, but with a great deal of realism, pragmatism, and therefore we are committing our growth for the entire year. We are talking about, as we said, around 4% in the volume growth. Annually, we are looking at about 8 to 9% or around 8% is the growth. We've talked about the EBITDA increase, which is around 170 rupees is what we are guidance which we are giving just now for second half, the increase between first half to second half. And with that, I will rest my introductory remarks, open up for questions, and we'll be happy to, wherever we can, elaborate further or comment, and or where we can't, we'll be very honest and frank enough to tell you, our situation. The one last one which I missed, which is mentioned in our press release, is our progress of our Kundan's third line is going on satisfactorily and on track, and we hope when that comes in next year, we will have some of the incentives which we lost because of Kundan incentive getting expired last March will get restored. And between that, and we've already started clocking in the incentives from Mukutban, between these two will be kind of back to a level playing field that what we were pre-March 2024. So that's how we'll, the only other major significant change which we see. Some of our competitors have the advantage today of having, incentives, especially in UP, which is enabling them to participate much more aggressively in the non-trade segment or even the OPC segment where they're doing. We are constrained there. Not that, as I said, our intention is not to sell more OPC or more non-trade. We would like to remain in the trade segment where we feel we have very strong brand assets. Our brands are today very well accepted, especially Perfect Plus, and Samrat has always been a heritage strong brand in UP. Chetak is a heritage strong brand in Rajasthan, and our distribution system, which we have our distribution assets, go-to-market assets, they're very strong in our core market. So as soon as markets, bounce back, we hope to be back again on the driver's seat as far as the trade and our channel sales are concerned. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, just a couple of data points needed. What was the incentive that we booked for Mukundban in Q2, and if possible in third and fourth quarter put together, how much are we likely to book the incentive for Mukundban, and also the volume for Q2 if possible?
Let Mr. Sarogi answer that.
So in Q2, we have booked incentive of 17 crores for Mukutban.
17.
17. Okay.
Okay.
And what was the other question?
How much more in the second half we are likely to book, and what was the volume of Mukundban?
had guided for total incentive of about 100 crores for the whole year. We are standing by that guidance. Okay?
Oh, okay. And
Like that. Huh?
yeah, and what was the volume in 2Q and the lead distance in for second quarter?
The volume was 50,000 tons and the lead 5 lakh tons, and the lead distance was around 340 kilometers.
340. No, lead distance for the full entire company.
For Mukutband it was 425 kilometers. For Mukutband.
Okay.
You're asking for the entire company or you're asking for Mukutband?
Entire company, sir.
For entire company it was around 350. The lead distance.
Okay. Okay. And last, sir, just a clarification. This Prayagraj 1.4 million ton, when it is likely to start?
Q1 we have mentioned.
Not Prayagraj. We are talking about Kundanganj. Kundanganj third line.
Yeah, that is that we know. But on the Prayagraj 1.4 million ton, when it will start?
No, that we will announce. We have not announced commencement. It is in the pipeline. But project starting, we will announce whenever we are ready for it.
Okay, okay. Lastly, possible the capex for full year 800 crore we said, and we have done 200 odd crore. So any downward revision in the capex?
The capex for the whole year we expect to do about within 700 crore. Okay.
Okay, okay. Thank you, sir, and all the best.
Thank you. The next question is from the line of Jyoti Gupta from Nirmal Bang Institutional Equities. Please go ahead.
The clarification, sorry, before you go on, just one clarification for Dolat Capital. What we are saying is our first unit which will come on stream is Kundanganj. Prayagraj is in the pipeline, but we have not commenced construction there, so we are not committing the date when it is going to come in. It is also linked to certain other things. So right now, what we are focusing, what we have visibility and committing is Kundanganj. It should not be read as Prayagraj is not happening. Prayagraj is very much as part of our plan, like a few other locations of grinding unit which we have announced, but we talk about these specifically only when we have started the project, broken ground, and that is where we stand as far as Prayagraj is concerned.
Thanks.
Can I ask my question?
Yes.
Yeah, please go ahead. Sorry.
So in second half, you said your EBITDA per ton will improve by 170. Just wanted to have an understanding in terms of cost. Where do you see the cost, and what kind of cost improvement you will see from Project Shikhar in terms of numbers from Mukutband and Unnati, and your logistic optimization? What kind of numbers you are building in the second half from these two projects? In case you have anything.
In the second half, we are expecting efficiency of around 70 rupees a ton for Unnati and Shikhar taken together.
Each after taking together 70 rupees.
Taken together 70.
And 100 will come basically from raw material and the volumes and the.
170 is a cumulative effect of realization, cost optimization, efficiency improvement, everything.
Yeah. Okay.
Yeah.
Okay. And I could see that you are not very positive, quite cautious on the second half. But obviously, first, so how do you see any particular impact apart from the non-trade segment that you see is coming from the consolidation? You're impacted, like adverse impact from the consolidation in your core markets. Apart from non-trade, which has taken downturn by 300 rupees per ton decline जो आया, उसके अलावा कुछ है?
So we are not seeing any impact there. As I told you, it's a function of, we are luckily, Jyoti, given our capacity, as we said, we've been operating at 100% capacity, and we would be we don't see that as a problem. And I talked about in those core markets, touchwood, fingers crossed, we have very strong brand assets. We've got very strong go-to-market assets. Today, we can say with great deal of, with some degree of, I think, pride, in terms of our people strength. We believe that the employer branding of the company has gone up significantly, at least from how we see interest of people, especially in sales and marketing, to come and join us at various levels today. So I think we are quite well placed to take on the market opportunities as soon as there are some tailwinds which come in and the market table improves. I deliberately talked about the non-trade, because that's an area where we don't participate, and that's where an area we are limited players participate in a limited way, and certainly it is not, OPC is not our preferred product. We don't like to do that, but when those segments come down, there is an impact, a spillover impact on the trade segment. So I am taking hope or encouragement from certain pronouncements which I hear in the market, where people are talking about increasing bottom line contribution through realization of 200 rupees. I expect some of that will come through the non-trade and the OPC segment as well, which should augur well for trade and the blended cement segment, where we are major players.
Okay. Sir, anything that we expect from the Orient, with the acquisition of Orient Cement? Do you think this is, with the Dani?
We don't operate in that market. We are very small operators in Telangana.
Okay.
We'll just watch it from the ring side. We are on the other side of the fence. They're sitting in Maharashtra.
Okay. Okay. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good afternoon, sir. I have a couple of questions. Firstly, on your premium segment, which is like very high overall mix. So when you say that the price of the trade segment sort of gets impacted by non-trade, is the premium segment also gets impacted likewise, or how is the difference sort of changes?
See, premiums don't exist in isolation. Premium, you are always, when you're talking about premium, you're talking about a base price. So if the base price drops, obviously, while the delta might remain similar, or delta may marginally grow, increase, but overall in the price table, you are going to have only so much of a difference between what's happening in the non-trade and the trade. So our premium, we consider that to be a competitive advantage of this company. As I've said in the past, that we are one of the few, or perhaps the only company where you can say with some degree of pride, who straddles almost equally between the premium and the popular segment. I don't call it popular, I call it the value segment. So between the value and the premium, we operate almost on equal footing. So to that extent, we are able to calibrate some of our shifted. So therefore, in this quarter, you'll see when part of the realization which we have delivered, why we have been able to keep our realization higher, or the drop lower than the market drop, is because we have been able to shift volumes towards premium in most of our markets. That's how our premium volumes have increased. But we don't see any absolute virtue in either premium or value segment. We will offer what the customer wants. And so if the value segment again picks up, when I'm upping my capacity utilization, not all of it will come from premium. It will come from value as well, because that's a very important segment of the market. You cannot, you don't operate right at the top end. You also, the middle matters, and we would like to be present everywhere.
Sure. One other question on incentives. So guidance for 100 crore incentives in FY25 compares to 160 crore or 140 to 160 crore in past 3 years. Is that right? Or
yes. So it's obviously the delta between what we were getting in Kundanganj and this period, especially 24-25, you will find that as a gap, because Kundanganj has stopped from 1st of April. and only Mukutban is what has come in its place. The Mukutban incentive are lower than what we were getting in Kundanganj. So there is therefore, that is why you are seeing the 160 to 100. That is the kind of gap which you are getting. Hopefully next year, as we go on, commissioning Kundanganj line 3, that will get restored. So you'll find us back. As I said, it will be a kind of level playing field once more between the two places. We will go back to our original levels of incentive in the company.
And the last question on your comment earlier regarding Orient Cement, you said you sit on a corner of the other.
We sit on the other side of the fence because we are in Maharashtra. They are mostly in Telangana and the south. We don't operate in that market much, in their core market. Even in Maharashtra, they are much more in the western and the lower parts of it. We are concentrated in Vidarbha, where they have a very modest presence. And so we'll have to see how it pans out post their, the acquisition, because I've been reading, just like you, a lot of analysis, because if you were to look at Adani as a combined thing, Adani already has a presence in those areas with their own brands of Ambuja and ACC. So how much is Orient going to add to their presence? It's not easy having brand integration. What will be their brand strategy? Those are things. So we don't see Orient really affecting us significantly as per their existing operation. In future, I saw that they have got lease in Rajasthan. If that comes up, how that will pan out. Or recently, I saw they're tying up on some fly ash in Madhya Pradesh, in Betul area. All those are in future. But similarly, they had a grinding unit plant in Maharashtra, which they gave up. They had a tie-up with Adani, maybe since this was in the annual, that has gone. So those are futuristic. But as on today, Orient and we don't have much of an overlap.
Sure. Thank you, sir. On all that.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Saravji, as you mentioned about 100 crore being the total incentive number that we are factoring in for Mukutban, how much actual cash have we received for the first half? Out of the 17 crore, or the entire balance is also pending?
See, 100 crore for the company, not especially Mukutban. There is some small incentive in some other units also. In the first half, we have received around 120 crore from Uttar Pradesh.
It's not from Mukutban, boss. These incentives don't happen hand in hand. But as soon as you get the next day, you get, like today, I believe you're getting income tax refunds immediately 24 hours. It doesn't happen in subsidy.
No, it comes with a lag.
Correct, sir. Yes, sir. So what is the closing balance, sir? Other than whatever we have booked as incentive, how much is still left to be receivable in the receivable account?
Excluding West Bengal, where the market and the subsidies, it is about 450 crores. And in fact, in West Bengal also, there has been a development in the quarter. The state government has filed an appeal against the High Court order, which had decided the matter in our favor. So that matter has also been dismissed by the Supreme Court. So currently, the state government does not have any legal recourse in the matter.
Sir, can you come again? 450 crore is the figure you mentioned. That is still left to be received. But
the total, if you were to say, what is the receivable on account of incentives from various governments as on date, it is 450 crore. Excluding West Bengal, where we have an additional amount which was sub judice because the government had contested it. And that contest has been disposed of by the Supreme Court. So the ball is back in West Bengal government's court. And they will have to, when they settle it, is a different matter. So excluding that, it is 450 crores, on which we see that as a timing issue and not any dispute issue.
Yeah.
Okay. And okay, can you mention that figure also, which is under dispute or litigation from the West Bengal government?
Around 140 crores.
Around 140. And now we have an upper hand because of the disposal by Supreme Court.
Always on an upper hand. We were always on strong ground.
Okay.
It's not a question of any upper hand, lower hand.
Okay.
Nothing underhand.
Okay. Thank you, sir. Sir, Saraogi, for the capital work in progress, the closing balance stands at...
Any questions? Saket, I told you, you're in Calcutta, you can't take advantage of so many questions.
Sir, last question and then I can come in queue, or sir, आप जैसा बोलिए.
Well, you don't monopolize. Go ahead.
Thank you, sir. Sir, Saraogi, the closing balance for capital work in progress is 558 crore. With Kundanganj getting operationalized by first quarter, what will be, sir, हम कितना capitalize करेंगे current year के लिए? And for Kundanganj, how much have we spent as of now?
I can't give you this figure of you can correct separately on this, please. Okay.
ठीक है, sir. Sir, I'll join the queue, and also, sir, in the press release, the update for coal mines are not mentioned, sir. So if you could give some color on...
We are expecting to start commencement of operations from Q1 of FY26.
Okay. And we are still extracting coal, sir. वो उसको आप कुछ mention नहीं है press release में.
Yeah.
Currently, sir, currently one of our Vikram coal block is operational, I think so. So we are extracting coal.
Yeah, I agree. Where we are extracting as per the capacity of the block. This is around 250,000 tons on an annual basis.
Okay. Okay, sir. I'll join the queue, sir, and I'll have 2 or 3 more follow-up. Thank you.
Thank you. The next question is from the line of Mangesh from Centrum Broking Limited. Please go ahead.
Hello, sir, and thank you for the opportunity. So my question is regarding demand in UP and MP. So I just wanted your views in terms of how much there could have been the demand decline in this quarter on YOY basis. And was it only because of monsoon and election after effect, or you think, and when do you expect the recovery in the same?
Mangesh, we cannot give you exact hours or estimated figures. Those figures of market decline, you will get it from the analyst figures, because today there is no published data in that regard. So we would not like to comment on that. But in terms of causes, it is also money availability, because a lot of fund release from the government have got delayed in many places, or they've got governments had other priorities. It has gone for different schemes in different places. So some of the fund release has been an issue in both these markets, and that is what has probably delayed some of the state level development work or development expenditure which happens, because money has probably got more to welfare schemes and other stuff. There have been no elections, as you know, in MP and UP in the last 6 months. So it's that in the overall situation. Okay.
Okay, and sir, another question was on the pricing front. So we feel that pricing post August has improved marginally. But what is their current realization compared to the exit of September? Is there any improvement?
I don't think there is any significant improvement, Mangesh. This is more or less it comes. One has not really seen any consistent improvement or improvement with sticks, and I personally don't expect to see any very significant changes between now and at least till mid-November.
Got it, sir. The final question to Saraogi ji. So given that we would have a very weak operating cash flows this year because of weak realization, do we see debt increasing, and any target or guidance on debt levels by the end of this year?
So the debt level we expect to close around 3,000. Net debt we expect to close around 3,000 crores. So like our cash from operation has been less than what we had budgeted. But then we have also scaled down our capex. I think earlier we had guided for 1,000 or that sort, so that also we have brought it down to 700. So we are calibrating our outsource also according to the instance.
Understood, sir. Thank you, sir.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. I have two questions. First, the margin guidance for second half, 170 rupees, or which you're looking forward to. First half we have done close to 540 rupees, and even if we add up the 170 rupees, full year margin would be, hardly to the tune of 620, 630 rupees. Versus, full year. If we first half we have done 535, and second half we are looking at 170 rupees higher, so close to 700 odd. So the full year average would work out to be 620 versus 800 we have done in FY24. So are you not building any price improvement in the second half, or what is?
Of course, we are building in, Rajesh. As we said, 170 rupees is not going to come purely from cost savings. Our cost and other initiatives that we indicated will probably give us about 70 rupees, and rest will come partly from price and a few other things as well. But we are not being bullish enough to say that we are going to get 200 rupees into the bottom line from price alone. We are positioning about because price increase, if I have to get 100 between now and March end, that's an average. Okay.
Correct. So you need higher price hike before that.
So average to get there, even if you would, I don't want to get into showing you back of the envelope calculations. You see how much it can peak, and it's a regional factor. Others, I'm not questioning other people's projections. They could be having other regions in mind. We don't operate in the south where they may be having more. I am looking at our specific market, Maharashtra. I told you, I see Maharashtra. I'm being cautious in Maharashtra because of elections and the post-election impact, because it takes a little time for, again, governments to settle down, monies to come out. Maharashtra also, there are various welfare schemes and all committed, so I don't know how soon monies will come and how much impact that will have on the demand and the pricing. Similarly, I'm being cautious. Our core markets is East UP, and the peak season where all of us look at a spurt in volumes and prices is usually, as you know, in this industry, from second week of January to February middle. That's the real time when you find historically cement prices go up sharply. But that's the time when we are going to see UP some major dislocation, okay, with the Mahakumbh and everything else. And that time movement becomes an issue and various things. So we are being perhaps, you might say, a little extra cautious, but you'd rather, be conservative than be bullish and come back to you, cutting a sorry face when you speak in 3 months' time.
Sure. And on volumes, any thought process? What sort of growth? Q2 obviously has been bad.
We mentioned that, Rajesh, we are looking at second half about around 8%, 7 to 8%.
Okay. And last question, sir. There is two large investments sitting on your books, UltraTech and Century Textiles. Cumulatively, if I look at approximately 700 odd crore value. So is there any thought, do the management or the promoters have any willingness, or can these be sold off and used to reduce debt or for some other efficiency programs?
There is no embargo in selling these investments. We have the mandate by the board. We can sell these investments whenever we want to. These are non-strategic investments.
Okay.
But we will not sell these to settle or reduce debt. So if we feel that we can deploy this proceeds from sale of these investments into a productive asset which can yield those returns, those kind of things, That point of time will consider.
Okay. So because you will be doing this Mayer expansion also, so this could come handy?
It could come for various things, Rajesh. This is, we would do at the time of our choosing and in terms of the opportunity. Since you have been associated with the company from a very long time, you know that we were sitting on a fairly large treasury balance for a long time till we made our Reliance acquisition. Okay? So we did it when at the right opportunity, when we felt it was right in our prudence. Similarly, we'll take a call on that, but we don't have any compulsion right now to dilute our debt by selling this. That is certainly a question we can tell you categorically that's not in terms of our plan.
Great. Great, sir. That's all from my end. Thank you. I will come back in queue.
Thank you. The next question is from the line of Giri J. Ray from Yes Securities. Please go ahead.
Hello. Am I audible?
Yes, sir, you're audible.
Thanks for the opportunity. Getting incentive as the additional money makes sense, and it is really adding to the profitability. But in terms of core business, so if I see in fourth quarter FY24, we have done a EBITDA per ton of around 974, which is pretty good. Significantly, I can see for first quarter, second quarter, there is a huge decline. Even in fact, second quarter FY25, we saw around 50-60% of decline from fourth quarter if I compare. So fourth quarter will be a volume-driven quarter. Obviously, volume is higher, then again, your EBITDA per ton will come down. So my question is that, so what kind of projections we can go ahead for fourth quarter FY25 EBITDA per ton? Is this a mark we can see somewhere in between 700 to 800? Because price, again, I do not see much price kind of appreciation in coming near term.
Actually, that's your view. You have to take a view, and it's not also a question of your view versus our view. You have to see the entire thing. We can only give you our point of view. First of all, when you are looking at last year, fourth quarter to now, obviously you will agree that the drop which you have seen is not isolated for us. Already you have seen 3-4 companies' results are declared, and we are no exception in that pattern. And in fact, in some ways, from whatever we have seen, you are a better analyst. Maybe we have done a tad better than other people in terms of the management of the bottom line in terms of the drop. That being one. Now, if you were to compare, to answer one question of yours, last year was a very interesting, or I found it slightly odd in a way, in the fourth quarter. Historically, in cement, from as long as I have been, fourth quarter, the surge you see is both of volumes and prices. Last year, fourth quarter was only volume without prices. Okay, there was no substantial increase in prices. There was a surge in volume. Now, this fourth quarter is a matter of conjecture. When you're talking of volumes, whether it will be volumes in isolation, if it's volumes in isolation, not just for us, others who are projecting 200 rupees, where will the 200 rupees come from? Obviously, that has to come along with a surge in prices. Now, for the 200 rupees, what other people are projecting, we don't see it coming. We would not see it. We would not bet our horses to expect it will be that high. So we are being conservative in this, but we certainly see a price improvement in the last quarter. And where I see the price improvement coming, without getting more specific, despite some of the other issues which we talked about, the elections in Maharashtra or Uttar Pradesh, Prayagraj, etc. And what I hinted in the beginning, I think the prices today, real abnormal prices are in the non-trade. And if the non-trade prices pick up, and people become more, there is more rational pricing in non-trade and especially in the OPC segment, I see you are immediately going to see a positive impact or positive rub-off spillover in the trade segment. And that has happened in the last 2 months also. You know, if you see what the areas where there has been improvement in prices, when we talk of nationally, you don't see any kind of price changes between August, September, October, but areas where there has been actually a price increase. Say North has recorded some price increase. The North price increase has essentially come, if you go through, it has come because people have corrected the non-trade prices. Before that, non-trade was pulling trade hugely down. Once some amount of sanity was restored in the non-trade prices, trade picked up. Similarly, we therefore hope that if that phenomena you see across the geographies, if not across the country, you will start seeing some impact of that coming, and so at least you will get back to the normal levels. Right now, I think the prices are depressed below normal, and that will come. And once that level playing field, if we come back to that by November or December end, which is entirely possible. You know, it's just a matter of, as I said, some sanity getting restored. If that happens, last quarter, you are going to see both volume and price increase. People are talking about pent-up demand. Pent-up demand will come. With pent-up demand, obviously price will also go. It is not going to be just volume.
So, sorry to cut you off. So you mean to say the price level which is hovering right now, so this is bottom out, means there is no further decline in price? It's like I can just assuming, or is there any kind of further, I mean to say there is no further decline in price, and there might be some chances of momentum go up.
Yeah, I think that would be a fair assumption. Things can only improve here. I don't see further decline happening because whatever disturbances, those are more or less done. Now Diwali over, Chhat will be over. By then your new crops will come in the harvesting season. Money will be there in the system. All of that, labor will return back from the Chhat things and harvesting and all that. People will go back. You will see. I don't see therefore certainly scope for further slide and decline. And I repeat myself again and again, that's the only conjecture I'm making, sticking my neck out. If sanity returns in non-trade prices, which are obviously in the hands of the big players, who are big players who participate in non-trade, especially on national accounts, etc., you are going to see benefits of positive rub-off of that also on trade.
Fair enough. So my second question is into premium segment. Right now it is 71%, it seems, right? So
71,
sorry? 61. 61.
Yes.
Okay. So this has improved a lot. Means like it was 51, now it is 61. So
I wouldn't call it improvement. It will be wrong on my part to, as I was trying to clarify earlier, this is strategic. If today the prices have come down, and if I am selling below capacity, for whatever reason I can't participate, I would focus which is giving me the maximum return. So it's a combination of product mix and geo mix. If I'm selling in markets which are giving me the geomix wise, it is the best market because it's close to my operations. And in those areas, if my premium product has a greater pull, I would sell more. I have got nothing against selling anything in the value of the popular segment. Okay. But if the value and popular segment, I find there is more maramari happening, and here I have got a thing, I would rather take the 20 rupees, 25 rupee premium, but I don't want to vacate that segment. This is a very unique advantage this company has. I don't know how many people recognize that. we are a company where we have almost equal, we straddle between both the segments almost equally. Okay.
Mm-hmm.
So
Yes, I truly agree with this because we are the highest premium segment sell in the industry change, and that is a good part in our company.
both sides, because to use my favorite expression, we are a double engine company.
Okay. And lastly, what was the Mukundvan utilization rate this quarter?
Rajesh, let's move on to the other one. We have given the figures.
Okay, I'll get it. Thank you, sir. Thanks for this answer. Yeah.
Thank you. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, sir.
I just wanted to have full year growth guidance.
Boss, we have said that, boss, already. We have said
whatever we have said, that covers it.
we repeat that. Full year growth guidance we have said in terms of volumes, we have said 3 to 4%. And we have given just now, as you heard, our EBITDA also we have given.
10%.
Thanks.
Sorry, you were not clear. Can you repeat it again?
I said volume we have given already. We said about a full year volume will be about 4%. 3 to 4% is what we have said. At EBITDA also we have given.
H2 and you can get it from
H2 we have told about 170 rupees over H1, which is about 530. So you can do your averaging of the two and come to the number, just like Rajesh did just before your question.
Thank you. The next question is from the line of Amit from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, just wanted to check captive coal mining status and when will you start the captive coal mines, and also with the petcoke pricing now having come off and rupees kcal, I think petcoke is now almost 1.5. What kind of cost benefits would still come in from the captive coal mines?
Captive coal mines, already we had informed for the Bikram. Already Sialgaveri is in operation, for which we do around 2.5 to 3 lakh tons per annum. And for Bikram coal mines, we are going to start, the first coal production going to start from the Q1 FY26. And petcoke, because our only requirement of the petcoke is only in one plant only, and we have reduced the requirement of the petcoke, and more on we are in the indigenous coal. And wherever there is a change in the prices, we take it to account. And our coal prices, you can see in the last quarter is 1.47 paisa per kilogram. And it will be, if the changes are there, we are not seeing much of changes. Maybe slight change will be there depending on the prices of the petrol which is going in the market now.
So in terms of the cost differential, our cost from Bikram coal block is expected to be around 1 to 10 paisa per 1,000 kilocal. And the ongoing rate for fuel in the central region is between 140 and 150. So that is the kind of difference that exists as per the current fuel price.
Thank you very much. I think that brings us to the last question, and it's really heartening to see we are ending the day with 150 people on the call. That's very encouraging. Thank you so much for joining, taking the time out. On a busy day, I see today there were at least 3 con calls from the cement sector. One in the morning, one now, and one after us. So that you took time out for us, it's really heartening. Thank you very much.
Thank you. On behalf of HDFC Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.